Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it was a very volatile session and still continues into the daily session from the New York close. After the US and China trade saga has influenced the Australian dollar and propelled it towards the highs of October, which is around the resistance of 69.45. At the moment, the level of October highs are holding and therefore could see a rejection from there. Still keep it very close to your risk management in case we still get further volatility. Overnight, or more to the fact early this morning, according to multiple reports, the US and China trade negotiators have reached an agreement to reduce existing tariffs of around $360 billion on Chinese goods and delayed a new round of tariffs scheduled to go into effect this weekend on Sunday the 15th. Although the 17-month US-China trade saga has lacked significant breakthroughs, according to news reports, the Trump administration has reached a trade deal in principle with China. Trump even tweeted and said that the US was very close to nailing down a deal. And at this stage, we're still waiting for confirmation though, but it looks like the steps forward are positive. Let's see if the market can pull back from the highs of October of 69.45 and look back to the support at 68.70. The euro also soured through the night and now this morning nearly claimed the level of 112.15 after the dollar took another tumble. We are overbought and the technicals are getting a little bit concerning in terms of this bullish move and therefore could see a pullback from the region of 112 and look down towards 110.95 or maybe lower to 110.40. The dollar yen soured after the market learnt of the trade deal with the US and China. And the market is now for dollar yen looking back to the top side of that rejection level of 109.70. I do anticipate the market may again reject this level, so therefore could see a pullback to the region of 108.75.90. Well, it would seem that the UK election, with the exit polls showing Boris Johnson's Conservative win to be a majority, and has actually triggered the market through the level of 133.55 to 70, and now looking back to these highs around April 2018 of 136 as the market continues to rally this morning. I still would keep out of this trade at the moment due to the volatility and the high risk scenario because the ranges are just getting way too big, and for my risk management it's just a point where I'd rather sit out for the moment and just observe until a better opportunity comes into play. The gold spiked through 82 this morning but failed to uphold the highs of 86 before its retreat. It is assessed that from the rejection now could see the market pull back to 58 or maybe back to the bottom side of the range and reassess from 1,450. Finish off with oil. That's the only market that's holding relatively firm and still holding to my objective of $61 a barrel. Any pullback should still respect the level of $58. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this day and to the great start to the new weekend.